Hello, good evening, everyone. You are welcome to another section of financial accounting class. I welcome everyone. Nice seeing you guys again. I would like to ask how our day went, but we do not have the luxury of time. Please, as I join in this call, I will appreciate if you can mute your speaker or your mic, and please off your camera, please. Off your camera. For those, you can turn off your webcam by the, is it left hand side? Actually, you will see the webcam, something like a camera, please. You can use that button to, yes, thank you. Thank you, everyone. Nice seeing everyone again. Today, we'll be moving on to another chapter. I was told you guys are done with chapter 4, if I'm not mistaken. Also, you guys are done with chapter 4 of the material. We'll be moving on to chapter 5. Some persons might be like, we're too fast. It's not actually what they call, it's not fasting, or like you're not too fast, let me put it that way. Just that we need to know those areas we'll be able to cover before November. No, not before November, before September, October. Then when we are doing our revision, we'll know the aspect that is left for us to touch and the ones that we need to revise with students again. So and I think that will be the most important. So all this now, all these ones we're doing now, they are more or less like an introduction to all those chapters. We need to familiarize our students with those chapters and to ensure that they grab it. Before we start this class, I want this thing to start by 8:25. I would like to state this to everyone. Number one, if you send me question, please, and I've not attended to your question, please just bear with me. By this weekend, I should be able to attend to your questions. I will do that this weekend. I think I have a lot of questions from students. And also for those that sent maybe their practical notes for me to just even review, I will also attend to that this week, please. Sorry, I'm apologizing. My schedule has just been tight. Thank you for your understanding. And lastly, for those that are asking questions about their registration, we have so many students here on this call that they've not even registered for ICANN, and it's not their fault. Some sent messages for guidance. The first thing to do, they need to do this, do that, please. You can please just send a reminder on your message. I will attend to that this weekend. Just do a reminder after this call. So tomorrow, Friday, Saturday, I'll be able to attend to that on how to go with your registration and other information you need. Now we can move on to the class proper. Thank you, everyone. Yeah, I said tonight, please confirm if you can see my screen. Please kindly confirm if you can see my screen. Don't be surprised when I say some people are still left in the dark as per registration. I have someone that has joined this. We have people that have joined this tutorial foundation class, and they are not meant to be in foundation. They are supposed to start from skills level. Well, it's because of guidance. Please reach out and we'll tell you where to start. It's never too late for you to go to the right class. It's never too late. Yeah, thank you. So tonight we'll be going to chapter 5 of our material, of our bulky material, I always say, and that is sales and purchases. I want to believe everyone can see my screen now. Sales and purchases. Is another intro, is the introduction I should say, or what? Sales, the word sales and the word purchases are not something new to every one of us. Either you're an accountant or non-accountant or accounting related students. If you're hearing of sales, you know they are buying, they are selling. If you're hearing of purchases, you know they are buying. I purchased this, I buy this. I sold this, you know the sales. All those words are not something new to every one of us. So, and the main reason for all this is who is that? It's ACTI. Can you please mute your speaker or your mic rather? Thank you as you do that. Yeah. So the word purchases, sales, and everything are not new to us. So today, what I'm going to do is that I'll just give us a brief something about sales purchases. Did I even go to a note like that? So as it's coming, you know our tradition here. Now I always say my students should jot. When you come to my class, please always jot. I might say one word now and it might not come again. Even when we're doing revision, it might not come. So we have the content here, and the content is talking about generally starting from the book of prime entry. The first question I would love to ask everyone is that what is the book of prime entry? What are the book of prime entry? But before we go into that, this aspect is recording bookkeeping. Recording bookkeeping. The word bookkeeping from the word book and keep. That is ensuring that your book and your record are properly kept for record purposes. That is, your company's record are up to date in ensuring that any information that is being needed for decision making or for any decision making, either strategic decision, tactical decision, operational decision, those records are made available as at when due, that is, they are made available as they are needed. So the word bookkeeping, this is needed. All these things I'm saying, bookkeeping and everything we are saying right now, they are needed because we want to ensure accuracy in our record keeping. We don't just pack record or just do it anyhow. It must be in line with the laid down standard. The laid down standard that ensures that records are properly kept in line with the laid down rules and regulation or laid down guidance. Are we together? So for bookkeeping, that's for bookkeeping. All these bookkeeping, I will employ every one of us to go and read, especially for those that will be taking the option of CBT in this coming examination. Some will be, this coming examination, you have two options. As for a foundational student, is either you choose a CBT or you choose physical. You choose CBT, CBT, we don't know how they're going to, but majorly it's going to be objective. So, all these cogent words, you need to know them. You need to understand them. And so what I'm saying in essence is that we should ensure that we understand every details of our material. So this one is saying bookkeeping is the place of recording financial transactions in the accounting record. That is the book of an entity. We've explained that it doesn't stop with recording. It doesn't stop with what? It doesn't stop with recording. So you identify what you need to record and you record, you classify as appropriate. Okay, they said transactions are recorded in accounts and there's a separate account for each different type of transaction. What is this one saying? A bookkeeping is it's a record that is being kept by an organization or by an account clerk or by an account officer that shows different transactions as they occur in the entity, as they occur within the entity. They say this one is not saying it is often the case that individual transactions are not recorded in the ledger account as they occur. What is this saying? Individual transactions are not recorded in the ledger as they occur. Instead, they are recorded initially in the record called Book of Prime Entry. Now, bring us to the question of what is a Book of Prime Entry? A Book of Prime Entry is the book that is used to record transactions as they occur. Simple as that. So let's see what they have here. Book of Prime Entry can also be called Book of Original Entry. We should know that by now. So each of these books or journals. Okay, let me list for us Book of Prime Entry. When we say Book of Prime Entry, what are these Book of Prime Entry? We already said Book of Prime Entry are the books that are used to record transactions as they occur. What are Book of Prime Entry? Number one, Book of prime entry include sales day book. That is sales day book. What do we mean by sales day book? Sales, we understand sales. Day book in the sense that we said we initially let's understand something. I said book of prime entry are those books that are used to record transaction as they occur. That is, when it happens like this, they are recording it. Now we're saying sales day book, which means it is a book that keeps a sales record on a daily basis. It's a day book. It keeps record of sales on a daily basis. That is, all those sales you made and customers are yet to pay, those receivable or credit sales, this sales there. I want to believe someone is getting me. So, according to the analysis they did, one of them is sales day book. What does sales day book does for you as an entity? It records sales on credit. When we say credit in accounting means receivable. It's also the same thing as debtors. That is, when you have the word debtors, receivable, they are the same thing. Sir. 1 minute, guys. So, when we say receivable, they are the same thing as debtors. So, what does sales day book does for you as an entity? So, sales day book are used to record sales on credit, meaning that when you have a cash sales, you are not bringing it here. I want to clarify something. When you have a cash sales, a sales that is that meaning that when your customer pay in cash, that is when your customer pay as that when the transaction occurs, you're not recording it in your sales day book, because sales day book is used to capture transactions, sales transactions that are made on that are made on credit. Do we understand what I mean by that? When you have, okay. So, this is going to be an interactive one course. I don't plan to explain all this theory because I think I have questions to solve. You're not seeing my screen, Mr. Folabi Chai. That should be your network. That should be your network. What should I call for this question? Okay, don't let me ask question yet. Something came to my mind and I wanted to ask, but let's go on. So, sales day book is used to record transaction on credit, meaning someone came to you to buy goods and they didn't pay. So you record those transactions. So another book of prime entry is sales return day book. Return in the sense that return inward. I hope someone is getting me. Return inward in the sense that sales, when you make sales, a customer, I went to Abimbola and Co to buy some item. When I got there, when I got there, oh, give me 5 books. So eventually we concluded, and I decided to pay on a later date. He recorded this transaction in his day book. When I got home, I discovered that one of the book has torn or something. One of the book is not even up to the standard I requested for. So I went back to return it. When you return, what happens? The stock of so company that you went to buy this item from initially, their stock will increase by that amount that you want. Okay. Sorry guys. Sorry, I'm still at work. Yeah. Oh, where are we? So as I was saying, I said we have sales return day book. Not to waste much of our time, these are return inward. That is sales return. When we say sales return, it's something as return inward. That is, they return it back to you. Something that you sold before, now they have to return it back to you. Then you record those transactions inside that book. Again, so another thing that comes along sales return is that when a customer return an item to you and you've already recorded it that this particular customer is owing you, what do you give them? There's something we call credit card. There's something we call credit card. I've never used it before. I've never seen one actually. So I think I always see debit card most times. Debit I see a credit. So anyone, but I've seen movie where someone will be given a credit card that is, it might be limited, might be unlimited. I go and buy anything. Those credit cards are used to acknowledge something like indebtedness. Oh, my company is worthy of any amount that this customer buys with this card. The credit card, go to any store with this credit card and buy anything. They're not saying the card will be paying. You know, you can take your ATM and go to supermarket and buy ice cream. Then you pay. You tender that card, you pay, the debit you instantly. If they didn't debit you, or those people do not receive money, they will not let you go. But credit card is different in the sense that they are not expecting that your an inflow of your for that sales will come in instantly. It's just like, oh, I have a client, you can go around with this card, buy anything you want. Eventually they will send maybe invoice on the total amount you're owing from different vendors you've gone around to buy something. Send it to the company and the company will pay. It's a credit card. So a credit note now in that instance is a note given to a customer. They issue it to customer to what? To acknowledge indebtedness. Also, are we together? Is used to acknowledge indebtedness, because before you are the one saying this customer is owing you, but now the customer is returning that item. Now you don't want to cancel your book like it's no longer owing you. Cancel it out. No, you now issue a credit note. When you issue a credit note to the customer, that means so amount, so goods worth this amount. We're owing this customer so goods worth this amount. That is that about that. So we move to purchases table. It's just the vice versa of sales. When we're talking of sales, they're talking of customer buying from you, right? When we're talking of purchases, you are buying from outsider. You want to buy from outsider or a vendor or a supplier, and you refuse to pay. Not that you refuse to pay, you are not ready to pay. That is where a trade payable comes in. Then in their own book over there, they record it as sales. But in your own book here, you record it as what? As purchases day book. In your purchases day book, it's a purchase on your end. So you record it in your purchases day book. Same way we explain sales return day book is the same way we explain our purchases day book. So that is that about that. I said I have a question the other time, but let me skip it. Another book of client entry I'm going to mention now is the cash book. Though before now, people have been hearing of so many types of cash book. We have a single column cash book, 2-column cash book, 3-column cash book. I think it's ends in 3 years. So what are we using cash book for? So I'm going to throw this question at someone on what we've explained so far. I'm going to call on. You want me to call you? Raise your hand. You want me to call you? Raise your hand. What do we have for Nabi? She's the only one that wants me to call her. All right. Mrs. Modupe, you have the floor. What do you understand by the word cash book? It's late already, Funke. Oh yeah, Modupe, let me have the floor. All right. Let me hear you. What do you understand by the word cash book? Can you hear me? Hello, Modupe. So I have to call someone else. Please, can anyone hear her? Can anyone hear her? You can speak. Kinda, you can speak. Kinda.
No, I can't hear. I can't hear.
You can hear. Okay. I think. Okay. Afolabi, I can hear you now. Okay. Let's leave that. Oh, someone else is raising hand. I'm coming. Let me just check. I just need one person, please. We don't have much time. Hi there, Olabo. Can you please mute your speaker? Can you please mute your mic?
Okay.
Balkis.
Okay.
Balikis, you have the floor. You want to talk? You can explain what cash book is. Hello. Okay, you don't want to talk also. Then who am I calling? This is to call cash transaction, both sales and okay. Modupe Afolabi, thank you for your input. I appreciate that. I like that. So I need one more person, like one more. Funke, you have the floor. Funke Alice about today. Modupe, thank you. Modupe said is used to record all cash transactions, both sales and purchases. Fine. Cashbook is used to record day-to-day transaction. Olangwaju Michael, nice one. Seita, you have the floor. I just need one person to speak. I don't know. Is it network or what?
Okay. Good evening,
Cash
everyone.
book is
Please, am I being heard? Okay.
Yes. Loud and clear.
I think someone is already speaking.
You can
carry on.
proceed. You raise your hand and you observed.
Okay. A cash book is a book that all transactions are being recorded, but the one received in cash and the one in the bank.
All right. Thank you. So thank you everyone who has contributed to this. I will say people have actually said so much like that. All right, Nia said cash book is one of the book of original entry that is used to record both cash and bank transaction. You guys have all tried. You've all tried. It's used to record all money transaction received and paid. Thank you. So I'm going to say something from you people's definition. I'm going to join two together because you guys have been saying the same thing, and you guys are right. But there's something I need to add to that. Is that I'm going to combine two definition. We know it's a book of prime entry. It's a book of original entry. Original entry is the same thing as prime entry. So it's a book of prime entry. What do we understand by prime entry or original entry? We said a book of prime entry or original entry are those books that are used to record a transaction as they occur. They are used to record transaction as they occur. That is day-to-day cash transaction. Day-to-day cash transaction, or they are used to record a day-to-day cash transaction. Cash and bank is still the same thing. Cash and bank transaction as they occur. Put it anyhow. It's the book of prime entry, a book of original entry, just to make your definition long. Hey, that is used. What do they use them for? To record day-to-day transactions, day-to-day cash transactions as they occur. Are we together? So you guys have all tried. It's just to add flesh to your definition, and that is just it. We're going to leave that cash book. So we're not saying cash book as we have three. We have single column cash book. We have double column cash. We have two column cash book or double, and we have three column cash book. When we're talking of column, we're not just saying column 1, column 2, column 3. It has a template. When we're talking of cash book, we have cash flow start from you have date, you have folio, you have particular, you have cash, you have bank. That is a single column. So the other one, that is the single column cash book. What about what's the between 2 column and 3 column? Sorry, a single column and 2 column. What's the between 2 column and 3 column? When we get into calculation, we'll solve that. So let's move to journal. What do we use journal for? A journal transaction that are not journal is used to record transactions that are not recorded in any of the book of original entry. That is the book of original entry that we've been mentioning so far. Sales day book, return sales book, what's it called? What sales day book, sales return, purchases return, cash book. So any other transaction that does not fall in this category falls under ledger, falls under journal. I hope someone gets what I'm saying. So for example, now let's say a transaction that you could not classify as a sales, not a purchases, nor a cash. How do you classify it? You use a journal to post it. That is why most people here I want to believe on this call there's some of us that are into ERP or using accounting software, one or the other. You'll say go and use your journal to post. Go and post into journal. You're the one posting transaction into journal. Why are you posting it in journal? We still understand everything. So for example, I said transaction that does not reflect or that cannot be used for a cash or a sales label or a purchase, you use journal to post. And for example, I'm going to cite a practical example. A company that just installed Satan, you have a question. Let me finish this. I'll accommodate that. So a company that just installed a software and they're trying to bring in their opening balances. You are bringing in your opening balances into your software because those things we believe that you've been keeping a manual record. Now you want to transfer everything into the system. Now you will use a journal to bring them in. You know, they are not concerned that just occurred. They've occurred for like one, I don't know, a year or so, but you need to bring them into your system to reflect the current position of the company. So what do you use? You use your journal. That is just for people you posting in accounting. And again, we said transaction that does not include sales or purchases or cash. Another transaction that does not include that. Can someone tell me one before Seta asks a question? Aside from the fact that you're bringing in your balances into the system, what other transaction? We have people that post here. Oh, you want me to be calling names? I'll call names. So I know people that post. So I miss you guys. We know ourselves. When we see accountants, we know what. So give me transaction that does not involve all those things that you need to post. Probably you're using your journal to post it. Can someone give me? Aside from your posting backlogs. People are not saying anything now. My people talk now. This class is. Are you here for us or you're against us? Provision, nice one. Your provision you're going to explain. No. Oh yeah, Ali, you don't have anything to say. Are they tired of bad mods? Okay, Seta, you have the floor. Seta, please.
Okay, thank you very much, sir. You were actually explaining a credit card. I want to ask this question. What is the difference between a credit note and a credit card?
All right, thank you. I'll answer that. So, who is raising hand again, please? Okay, should I just take this question? Someone is saying expense. We said expense. I don't want to. I know you use journal. Fine, reversal of payment. Accountants are talking. I know you use journal or your ledger or whatever. You use journal to post expense. I know. So what we're saying in essence is that transaction that does not involve sales or purchases or cash that you post. Your expense, most of your expense involves cash. You went to buy something, probably for business, office expenses, stuff like that. You use your journal. You know when you post in your journal, all expenses you are saying, people saying expensive, all expenses you are saying, you debit expense and you credit where? What do you credit? You credit either your bank account, that is cash, or you credit people you are owing. That is what? That is your purchases, sales day, policies day book to show indebtedness. So bad debts, So one is bad debt. Buying assets. When you buy assets, don't be saying you go. Depreciation. This is what I've been expecting. Jima, thank you. Depreciation. It's a transaction that does not involve cash. It does not involve you buying anything from anyone. Someone that mentioned provision, you are on the line. But provision, what are you providing for? You don't just make provision anyhow. Is that you're providing for bad debts, you're providing for depreciation. But what I've been expecting is depreciation. Bad debt, nice one also. I like bad debt. I don't like bad debt. Don't let me say I like bad debt. So bad debt, depreciation. But what I was expecting in this class is depreciation, not to talk of impairment or anything. So if we want to be going far, I'm now mentioning, let's say bad debt, let's say impairment, let's say, because the reason why I didn't want to take bad debt as a whole is because before you can have a debt that is bad, you must have made sales. Before you can have a debt that is bad, you must have made sales. That is, you sold goods to someone, the person now run into indebtedness and he was not able to pay. You know, when you sell, you would have taken cognizance of that in your sales day book or whatever book you use for your sales. So that means that's why I don't want to take bad debt as a whole. Bad debt does not just arise if there's no sales. There must have been sales before bad debt arise. But depreciation, you don't need to make any sales. You don't need to make any purchases. The purchases is that, okay, even you might not even buy any asset. You have building, you have laptop that you use. Depreciation can set in from there. Impairment as a result of goodwill. So many things. Thank you. So, Satan asked question about a debit. Who is raising hand again? I want to believe we understand what I just explained about journal. You use journal to post expenses also. I'm not saying that you do not use it to post expenses. I was just explaining that the transaction, according to the explanation given to us in our material, transaction that does not involve cash, they might ask, for people writing theory, they might ask, it's a theory, what's it called, objective question. Transaction that does not involve cash and does not involve, what's it called, and it should have impact on your profit at the end of the day. What transaction? Depreciation. Depreciation. Yes, I want to believe we understand that, and I'm trying to remember. Okay, difference between credit note and is it debit note? Credit note and credit card. Okay. Yes, I explained that when I was is it debit? Credit note and credit card. Yes, I explained that when I was saying something. I even used a credit card as an example to explain credit note. A credit note is issued to a customer. A credit note is issued to a customer that return an item that has already been purchased. I want to buy on credit from you. I'm buying on credit from you. I'm going to pay later. Fine. It has been recorded in my sales day book. So I discovered that this item is an inferior product. I need to return. Once I return, you will issue me a credit note. I can use my credit notes to carry another item. Sorry, I can't pronounce that. I can use my credit notes to take another item on your shelf. I'm still not paying you, but I can take another item from your shelf with my credit note. Credit note is showing that the company is now the one owing me. Are we together? That means a credit note is showing indebtedness. So now credit card, when you work out with when you go around with credit card, they give some company issue credit card. They are not saying there's money in the card. What the credit card does for you is that you are going out to buy whatever you want to buy with the credit card. Who is this calling now? You go around to buy whatever you want to buy with the credit card. That whenever you at the end of the day, they know this credit card is being owned by so individual. This credit card is owned by this company. They will sum up whatever you are owing and therefore to pay. There's some credit card that has limit. There's some that doesn't have limits, unlimited. Just they go and be buying. So credit notes, when we want to talk about advanced explanation of credit notes, they use it to reduce tax liability for goods returned, because you must have returned goods before a customer can issue that to you. Because eventually, when they make sales, when that customer makes sales, they've recorded the sales. But when they return the sales, you issue them credit note. That credit note now, eventually for tax purposes, you not be telling them this total sales you have me, I have credit note to reduce your tax item that has been reduced. That's a credit note. Credit card, we're saying they give you what is it called? What should I put this? Okay, something like an access for you to buy something of credit. It may be a bank that issues it to a company. It may be a bank that issues that credit card to a company and account. In the context of you buying something, Is there anyone in the banking sector here? Hello? I'm waiting on this
Plenty,
call. Hello?
plenty, plenty now.
Can anyone hear me?
Yes, sir.
Yes,
Loud
we
and
Can
can.
hear
clear.
you.
Explain. Credit note is issued to customer to my network fraud. Anybody hear me? Hello?
So we cannot hear you, sir.
We can't hear you now. You can't even hear anything at all.
Actually, can you help us mute yourself, please? Please, who is eating? Please mute yourself. Actually, help us mute yourself, please. Hello? Hello? Ah,
Hi, sir.
God. Please, sorry, my network.
Welcome back,
I
sir.
lost my network. Thank you. Thank you. Yeah, where I was explaining credit and debit note before this happened. Let me share my screen. So in simple time, a credit note is being issued to customer to show that they are owing the customer for a goods returned by the customer. So someone asked question about a credit card and debit, a credit card and credit note. So why a credit card? It's a card now. Yes. Why its credit card is being issued by bank? Bank issued it to, like, let's say, big companies or big net worth individual, so that whenever they go out to buy something, they can go out to buy something with the card. They're not paying. They're not paying. So whatever payment they need to do, that bank that issues the card to them, that issues the card to them, will be the one to be paying on their behalf. Salary enhanced inclusive. I don't know where we have salary. Okay, so they'll be the ones to be paying. Eventually, their individual or that company that the card is being issued to will now be the one to settle the obligation at the end of the day with interest or commission or whatever. So let's leave that aspect. Where are we? So we're explaining all these journal and everything. So now another important aspect we need to note is the control account. When we say control account, a control account is used. So when you're seeing people say, when you're seeing a question that asks you to post this transaction into a control account. So we have two control accounts. We have receivable control account and we have sales ledger control account, or you call it receivable control account. Receivable control account and sales ledger and sales control account include the same thing. So they said a control account is an account that summarizes a large number of transactions. What do you mean by a large number of transactions? We've already said book of prime entry or original entry is a book that record transaction as they occur, that is on a daily basis as they occur. So that means in a day, depending on how well your company makes sales, or depending on how much sales that your company makes, you can have thousands of transactions in a day. For example, let's take supermarket as an example, and let's say they're using a prime entry and they decided to be keeping a T account for each of those customers that branch into their store. So imagine number of transactions they're going to have. So eventually, at the end of everything, they need to prepare what? A control account. So that is where we move to control account. I should give us the definition on this control account aside from all this. This one is too much time. Okay, I want to believe someone is writing. Have you guys lost my network again? This one is still active. Yes. Yeah, please let me see you. Can someone just say something if you can hear me? Okay, thank you. So, control account. A control account is a memorandum account. Yes, it's a memorandum account into which are transferred in total the total amount of transactions which have been debited or credited in details to individual ledger accounts. I think that's what. Let me pick it again. So, a control account, we can say a control account is a memorandum account. Write it in full, or don't write memo. Is a memorandum account into which are recorded in total
Sir, please take it again. Your voice is even faint. Can you take it again, sir?
This network, that's what I'm typing. You can see my screen. Please, if I'm taking it again, you might not. That was why I started to type because I think my network is somehow tonight.
If you put your screen, you can't see it. I can't even see your screen here.
You can't see my screen, Mr. George.
Yeah.
Okay. think we can solve that problem. Can you see now?
Yes.
Mr. George.
I'm trying to see it. I cannot see it clearly. So,
Okay. You know, the problem I have now is that my network is not great. Okay. I think we have a last, we have another option. We
yeah,
have
yeah, yeah.
another
I can see it now.
Okay, let me use this option then, which is okay. We can say this is a control account. This is not too tiny.
Correct.
So I was saying a control account is a memorandum account. A control account is a memorandum account into which are recorded in total. Or before they record, they've recorded it. Yes, we've recorded those transactions in our prime book, Abby, in our book of original entry. So they are transferred, into which are transferred in total. We are transferring them now because they've been recorded, transferred in total. The total amount of the transactions, total amount of the transactions which have been debited, or credited in detail to individual ledger account. When we're saying individual ledger accounts, hey, a customer called Afis came to your shop this afternoon, decided to buy battery, Tiger battery, you record the transaction. When you want to record that transaction of Afis, you debit, you have account to debit, you have account to credit. So Afis came to your shop this afternoon to buy so you write in details, Mr. Hafiz bought battery on credit. When I decided to buy battery, I've decided. I'm sorry, this bought battery on credit. What is the entry for this transaction? What are we recording? What are we debiting? What are we crediting in this transaction? If I'm buying on credit, what accounts do I need to open? From what we've done in the past and the last class. Okay.
Purchase day book.
Says day book.
Please, those two speakers, I want to see. Someone was saying purchase, someone was saying sales. Why is it purchases? Why is it purchases? Why is it sales? Alice, Funke Alice, why is it sales?
Can I
speak, sir?
Funke Alice, why is it sales? Sorry, my network is breaking. I know two people will say ask questions like they can. Okay.
So can I talk now?
You can proceed.
Hello, can you hear me?
God, my network.
We can hear you.
Okay, thank God. It's not me.
Okay, you said Mr. Fish bought something on credit. So since Mr. Fish is buying, let's say he's buying from us on
Yes.
credit. So we are the ones selling to him. That's why. And you said sales day book is when when we record things we sold on credit.
All
So
right, thank you.
thanks.
Thank you for that. For those that are confused, one thing you need to know is that when the transaction happens or when the transaction occurs, you need to determine this thing. Are we the buyer or we're the seller? Are we the one selling or we're the one buying? Oh, we're the one selling. We are selling now. We have our sales day book to record transaction into. For a person saying purchases day book, no. Purchases day book will only occur when you go outside to buy item. You are selling here. You are the one selling. Are we together? You were the one selling. Yeah. Thank you. So that is that. You know, accounting has cycle. Okay, don't let me jump. This control day book, I said control day book, control accounts. Yes. Someone already answered this part for us. Now, you record this transaction in what? In your sales day book. When you record in your sales day book, Afis is what? Afis is owing you. You open an individual account for Afis. Mr. Afis, so account. Then what does he buy? Battery. When he buys battery, you debit that account. It is in your book. Oh. But when you okay. Now if I split my screen out, okay, let's do this. I hope this is a little clear. So let's just illustrate this. Mr. Hafiz is buying this item. Yes, Mr. Hafiz is buying. This is, let's say we have our sales day book or our sales day book also. In your sales day book, you can put it as a written something. Put it as, don't even use T format. Mr. Hafiz buys on credit. You put your date. What is the date? This one has heading, always has heading. I think this one should be, it used to be date. This used to be particular. If you maintain, if you are the kind that maintain something like voucher number, receipt number, invoice number, you use folio, then amount. Okay, this thing remain one. Amount. Then, so what transfer between you guys? Date, so particular, purchase and sales of battery. Sales of battery. Folio, invoice number 16 something. Done, amount 500. You know you are recording this. If there's any other transaction that happens that day, you use this date. You just for it's for a date, something you're doing 1/2/2025. So sales of battery, invoice number IBJ, the amount 500. You're keeping your what? You're keeping your sales. You're updating your sales day book. At the end of the day, the balance you have in all of this will be transferred into your control account. Please mute your mic. All this, you open your sales day book, you open your purchases day book, eventually everything will be transferred to your control account. That is why I want to give us this control account information so that when we're doing all this, we know where you are transferring this figure to at the end of the day. So now, where we stop is the definition of a control account. I said it's a memorandum account into which are transferred in total the amount of the transaction, total amount of the transaction, which has been debited, anyhow, have been debited or credited in detail to individual ledger accounts. That is, in the one from the sales day book, return day book, purchases day book, everything will be recorded here, either their debit or credit. Is someone following me? So to continue, you see this control account, it has uses. What do we use? From this explanation that we've given about control account, can someone say something about what do you think this control account is being used for? What can they be used for? Or what are we using them for? Why do we need to open a control account? From the word control. When you want to put control in place. Okay, I think time was gone. Okay, uses of control accounts. Let's write something down. Uses of control account. I'm diverted from the study part again. Use of control accounts. Let me see if we have some from the study pack. Oh, this okay, let's proceed. So, uses of control accounts, one of them is location of errors. You will be able to spot, is there an error in this figure we're transferring? Is there an error in what we've recorded in our individual ledger? Is there an error from the sales day book or purchases day book? So a control account is used to what? Number one is used to locate, let's say location of errors. Another thing, as you locate, you prevent. Prevention of errors. Another one is it's management control, or it ensures management control over the business. Another one, okay, you can use for internal check. Internal check on ledgers, or who posts ledgers in a business entity? A short question, is it a clerk or accounting officer or something? Okay, internal check on ledgers posted. Oh, posted ledger posted. Okay. Another thing, you use it to detect, easy detection of missing figures. I think 5 is okay. Okay. Another one we need to know is that, when you open a sales day book, from a glance, we'll know who is owing you, who is here to pay, who has paid. Yes, it is used to maintain or to manage your debtors and creditor balance. It helps to manage debtors and creditors balances. That is, the actual amount that your debtor is owing you, that your creditor is owing you. I think that's okay. So another thing about control account is that we mentioned control account. It has classification. Can someone just guess, or can someone just tell us the classification of control accounts? What do you think the classification will be from what we've been explaining so far? Let me say classification. This class is too dull tonight. What's happening? Is it network or is it code? One. Okay.
Yes, sir. Can I say receivable control account and payable control account?
If you say that, they say on the line, what are receivable? Receivable emanates from the word sales, because if you don't sell, you cannot have a receivable. If you do not sell on credit, you cannot have people that will be owing you. If you do not sell on credit, you cannot have a debtor. Thank you. I would have loved to buy shawarma for you, but sorry, it's late, and it won't be good to some people. All right, so so that's that. Thank you. Someone is saying, sales and purchases ledger account. Thank you. Those are just the two. That's the two that you needed. Any transaction you are recording falls under sales or purchases. And I said they are transactions that relate to what? They are transactions that relate to you paying on credit or customers paying you on credit. When it comes to customer paying on cash, you will record them in your in your cash book. Thank you. So not to waste much of our time, time is fast gone. So we can just say sales. Sales ledger control account, and two is purchases ledger control account. So we understand. Next thing I'm going to do now is to give us what we should be expecting on the debit side of sales ledger control account, what we should be expecting on the credit side of sales ledger control account. Then all this theory, I'll give us to go and read all this theory that they've written here for our consumption's sake. All these receivable control accounts, the way they emanated, I want us to go and read. Then we will go and read all these ones by ourselves, please. I want us to solve question. I want to jump into this. I need us to solve question. If it's just two questions, we're able to solve. And when you go back to your book to read those things, you will still understand better. Thank you. So I'm going to give us what we should be expecting on the debit side of a control account, of a sales ledger control account, and what we should be expecting on the debit side, credit and debit side of yes. So let's start with let's have a sales ledger. So what are those things? Can people just okay, then let me so the item we should be expecting on the sales ledger, debit, let's say debit side of a sales ledger, debit side of a sales ledger, Oh yeah, what are those things you were expecting on the debit side of a sales ledger? One, please don't raise hand before you even talk. Just talk. I need this class to be echoed. What are those things you'll be seeing on the debit side of a sales ledger? Hello? Okay. I'm going to give us those items we should be expecting on the sales ledger, or we should see. We have sales itself. What sales are we talking about? We're not talking of it cash sales, we're talking of it credit sales. Another thing, you have interest, charges. Another thing is dishonored. Did I get this dishonored like this? Dishonored check. Oh, dishonored check, dishonored bill, all this check and bill. Oh, let's say check or bill. Yes, discount. Please, can someone explain the difference between discount allowed and discount received? And another person to explain what difference between carriage inward and carriage outward.
Discount discount allowed are discounts that are given to customers on the sales that we made, the goods that we sold out. While discount received are discounts we received on the purchases.
Thank you. Someone else will explain carriage inward and carriage outward. Meant to debtors for clear.
Carriage inward, I would say, is the cost of transporting items purchased into our stores, while carriage outward is the cost of transporting them out to our customers.
Thank you. They've explained those items well. I'm going to just add a little flesh to them. So for number one person that explains discount received and discount allowed. One thing we need to note is that when we're talking of discount, what is a discount? For this class sake, a discount is an allowance of the selling price of a goods or services. That is an allowance of. Do I need to write that? Number one is not okay. Sorry, a credit side. Now I'm going to give us the item on the credit side, but before that, I want to just type what I just explained about discount. For those that want to write down, it's not number one. No, this is not number one. No, I'm just people, for some people that wants to write new. This is not number one. No. Or do I need to write? Okay, don't let me write. So that people will not write it as number one. So I'm saying a discount. A discount is the allowance of the selling price of a good. You went to buy something outside, they said it's 500 naira, but there's a discount of 15 naira. You know, what does that, what happens to your money, to the amount you're paying? It's a reduction. It's a reduction. It's a, you call it, sometimes say a discount is a reduction in the cost of an item, or it's an allowance of or reduction on the selling price of an item, anyone you choose. So then we have two types of discount. We have discount allowed and discount received. One is an expense, while one is an income. Which one is an expense? Discount allowed. The word allowed means that we accepted, the company accept to give out discount. What do we call discount? Reduction in the selling price. Meaning that eventually when a company called Najat is making a sales, oh, this item, the cost price of this item is 15 naira. I'm selling five times 5 is 250. That's 25. 25,000 is what we're expecting, but we're going to give 10% discount. 10% of 250,000 is 25,000 also. So that means eventually the company will not be receiving 250,000. That will be, they will be receiving 225,000 naira because of a discount that has been given. Now we're saying what is a discount? Is an expense to the company. That is a reduction in the selling price of an item. So discount allowed are given to customers. They are allowance given to customers. You might attach condition to it. If you do this, you'll be given discount. If you dress nice, you'll be so the company can choose to do that. So, but discount receive. Discount receive are those you receive from your own vendors, your suppliers. You see those customers that came to you to buy item, to you it's a discount allowed, to them it's a discount received. So that's just how it happens. So carriage inward and carriage outward in the same sense. Carriage, you know, I said discount receive, discount allowed is an expense, while discount received is what? Is an income to you. But now carriage has different scenario. Carriage, both carriage inward and carriage outward are what? They are both expense. Are we getting it? Carriage inward and carriage outward are both expense. But discount inward and discount outward, one is expense, one is an income. But carriage, both carriage are what? Both carriage are expense, because either you carriage inward or you carriage outward. The other that carry in will collect money. If it's carrying out, it will still collect money. So that one is so thank you for the explanation, those people that have explained. And I believe we understand the explanation because they've used a layman word to explain, and they've done well. So for sales ledger, we're coming back to sales ledger now. What are those items we'll be seeing on the credit side? Please let's take notes. We have credits, we have so on the credit side, we'll be seeing cash received from customer. Cash received from customer. I know you have question, no? I'm sure. Checks from customers. Discounts allowed. Bill receivable, bad debt, return inward, we have credit note issued. Yes, credit note issued. Let's check our material. Let's see what they've added that we need to incorporate in what we've written down. So for our material, we have receivable control account. So it said a receivable control account is the name given to the account in which general ledger or total receivable. What are receivable? Receivable are debtors. Fine. Thank God we understand that. So they say a control account is an account that records total amount. That is total amount for receivable. Receivable are those people that are owing you from your sales day book that you've kept. People that are owing you. When they are now ready to pay, or some of them pays, or some of them return goods, which eventually when they return item, if they are owing you 15 naira before and they return item worth 10 naira from what they've sold, what you've sold to them, it reduces the amount of obligation they have with you. Now, let's see what we can also add to our debit and credit here. In their own, they say sales ledger is still the same thing as receivable control account. Still the same thing. Sales control account, anyone you choose to use. So they have balance word forward, fine. We have credit sales, okay. Dishonor check, revenue adjustment. Revenue adjustment, okay, they've explained there. So customer fails to take a discount when expected to do so. So we have credit side. There are other things that I've added here that can help us carriage outward. So you can just match the two together. So on the credit side, we have payment received from customer. That is, customer that was owing you initially decided to pay part of their money. Sales return, he's not even paying part now, but he's telling you that I'm owing you for 5 items that I bought. Now I'm returning 2. There's this thing we use in accounting, not really accounting, like it's accounting. They call it SOR. Is it SOR? What's this word they usually use in supermarket to? Do we have any inventory officer here that works in a store or something? Someone is raising an what is the right word?
Actually, my question is not for that one. I raised my hand before.
I just wanted to help me remember something. Okay, yeah,
No,
what's the
no.
question? Yeah, what's the
I was
question?
saying discount allowed on the two sides, like the debit side and the credit side. So I was thinking, is it not offsetting each other?
I put discount allowed in both sides.
Yes.
One will not be allowed. The one on the debit side should be disallowed. And no one is saying anything. This is disallowed. This cannot be allowed. This is disallowed. That is, a customer fails to take advantage of a credit. Sorry, thank you. Thanks for that observation. It's disallowed, not allowed. Is there another observation there? That's what I'm saying, like something like this one, they said, you see their own, they said customer fails to take a discount when expected to do so. So it will be captured as discount is allowed. Or discount, any word you want to use, maybe he fails to take it or anyone, but it's not allowed because you're not giving it out at that instance. Does that answer your question? So I was trying to explain SOR. Is it SOR? I can't even remember the word. So it happens like this. For example, in a market setting, or let's say supermarket, let's say a store, for example. My name is Amity. I have a new product, let's say wine. I sell wine. So we have a new product. Oh, there's this company called Nigeria and Enterprise. I went to her, I met the madam. Madam, please, I have this new product. I'll give you 10 crates. So in the next 3 months, I'll come back. If you're not, you can, I'm not saying you should pay me right now. I'll come back in the next 3 months. I'm giving you this item to sell. In the next 3 months, whatever you sold, you pay me the cost price on them. Whatever item that is left, I'll take them. I don't know if we have anyone here that has seen that agreement before. Oh, I'm giving you this 5 bottle of drinks. I'll come back in the next 2 weeks. This is the cost price I'm selling to you. You can add your own margin. So if I come back, whatever left, whatever item that is left that you are yet to sell, I'll take them. You pay me the cost price on the item that you've sold so far. They call it something in, especially people in, I'm not in the line, in the long, they call it something something like SOR. No one is here to answer that. Sorry, guys. Hello, yes, sir. Yes. Ijeta.
Sorry, can anybody hear me? I just want to be sure it's not my network.
Even here too, I cannot hear too. Something here.
Oh, okay. So definitely it's from his end.
Yes.
I think he's making a call. That's why he switched off his mic.
Yes, it's muted.
Oh, okay.
Hello, sir. Hello, guys. Sorry for that. I was on the call. My manager called me for something.
No problem, no problem.
Yeah, sorry. So I was explaining. What was I explaining again? Sorry. I don't want to end this call like that. So, guys, I will have to go in 15 minutes. I hope we can do a makeup class on Saturday. Sorry, something came up and I need to attend to it. It's urgent. It's a work related something. Sorry. Uh, Let me just give us this theory so that we can solve questions probably on Saturday. So we can fix. I will send us the details, the time and everything on Saturday to make up this class. Sorry for that, guys. Where do we stop? So we have the item on the debit side and we have the item on the credit side now. I think someone asked a question. Hello? Can someone hear me?
Yes, sir, we can hear you loud and clear.
Yes,
Yeah, please.
please. Yes.
Yeah, someone asked a question. I was trying to explain that before the call came. Hello? Okay, in the absence of that, so you see, as we have, these are the items that will feature on the debit side and on the credit side of a typical receivable control account. So please, let's read these entries not recorded in receivable control account. This one is saying only transactions that relates to credit sales are recorded in the receivable ledger control account. We know that by now. The following transactions are not recorded in the receivable ledger control account. Cash sales. We'll be saying that any sales on cash, any sales, either they paid cash or they paid to bank, for which the entry is this, you are not recording them in receivable control account. Changes in the allowance for irrecoverable debt. What are irrecoverable debt? We have bad debt. We have irrecoverable debt. A bad debt can even be recovered. When it's recovered, when it's being recovered, what happens then? A debt that you've concluded in your mind, like this one is not coming in again, and eventually the customer decided to pay, it can income to you. But any irrecoverable debt, you've written it off that this money, you make a provision for it, that this one is not coming again. So it's not a change in the allowance. That means you make a provision for 15 naira irrecoverable debt, but eventually you're able to recover a little. You recover a little, and the allowance is now less or lesser than the amount you initially booked. So that transaction will not, because it's a transaction that will affect your cash flow at the end of the day. So it's not going to come into your receivable control account, because when there's a change in that recoverable debt, it will have impact on your cash. Meaning is that there's a change in that because a customer has decided to pay a little part of the money. So that is that. The balance on the receivable control account might be described as trade receivable on the face of statement of financial position. So meaning that whatever balance you have there at the end of the day will be used in your statement of financial position as your trade debtor under your current assets. I want to believe we understand that. And all of these terminologies, let's just read the terminologies. Then we move to purchases. The same way we explain purchases is the same way we are going to do for sales. Another thing, one thing I've not actually touched is the aspect of this purchase and sales cycle. What do you mean by sales cycle? In literal term, what do you mean by cycle? Cycle is the way this transaction started, that is from the beginning to the inception of this of the transaction. That is, how does the transaction emanated? The transaction starts by a customer approaching you, comes to your shop, purchase an item. Then when he purchases the item, then what happens? A sales invoice or a sales order is given. Then after that, you recognize an invoice. Then the customer acknowledges it. To acknowledge your indebtedness. That is for sales. Let's go to sales. Let's just go around the sales cycle. So the sales cycle started from a sales order. We have customers that places an order with you. When I want to ask a question. If a customer, for those of you that do online sales, a customer places an order, do you record transaction? Do you recognize revenue in that instance? No, you will never record revenue because the customer is just to pay. He only makes an order. Until the item is confirmed, it has been delivered, and he acknowledged them. So when a sales order is made, you're making an order. The item has not even left your own house. Either you're operating from your office or your house, anyone. Thank God we have so many online sales now, online vendors now. So a customer made an order, one. Another thing is, after sales order, the next stage is the goods dispatch note. Goods dispatch stage means that he has made an order. Then you pack this order, you wrap it, put the number of the customer and everything to be dispatched to the what? To the customer. As that item is going on its road, what do they call those kind of items? They call it goods in transit. They are those items on their way in transit. The same way you say, oh, I'm on transit, are you coming back? Is it on transit or in transit? So goods in transit are those goods that are on their way to be delivered. So it's the same thing as we have goods dispatch notes. It will be a dispatch note in your own care because it has left your own office. It has left your own warehouse. The customer made an order. You dispatch those items out. In your own instance, it will be a dispatch note. You give to the driver or the dispatch rider that, oh, take. Sign here that you've received this item from me. As it's going on the way, it turns to what? Goods in transit. When the dispatch rider or the driver gets to his destination, what happens there? He will be given a delivery note. He has a delivery note that he will give to the customer. Your own customer over there will have to receive that delivery note and sign. That delivery note, if you are using accounting software, the delivery note, that is where this thing comes. If you are using accounting software, you have a sales order, then you record. Goods dispatch note has nothing to do on even your sales order. Sales order is just showing you like you've made, it's not even adding to your inventory yet. Good dispatch note is not adding anything to your inventory. Delivery note, that is where the problem starts from. A delivery note is showing that this item has been delivered to the inventory. It has impact on your inventory. That is the inventory, it has impact on that. On your inventory. That is, you have 2 of this item before and 5 was delivered, make it 7. That is a note that accompanies the goods. The customer will check this to make sure that it agrees with his order. So when it's confirmed that and is signed, it is not left to the store officer to confirm the item. Oh, this item is in line with what we ordered, our sales order. It confirms everything, then takes them to the store. Then it impacts your inventory. Now, you are seeing this comment here, double entry. Does it have double entry? No. All this one has no double entry impact. Now, when it gets to sales invoice, that is where double entry impact starts. But inventory impact starts from delivery notes. That is, you acknowledge the receipt of those items into your store. But double entry impact starts from the sales invoice. Now, sales invoice is showing an acknowledgement of indebtedness. That is a request for payment from the customer for goods delivered. That is you acknowledging indebtedness. That, oh, now you've gotten my item, you have to pay, you are owing me. This one is saying, does it have double entry impact? Yes. How does it have double entry impact? Because when you have your sales invoice, you record your sales, and you record your sales, and you also take note of where the item is coming from. If it is sales now, the customer would what? If the customer is paying, if it is sales on your end, you credit it and you debit your customer. That is a double entry. That is, it affects one, it affects the other. But from sales orders, delivery, it's only affecting one impact, just one. It doesn't have double entry impact. The one that has warehouse or inventory that has impact on inventory is the delivery note that increases your what or reduces your inventory, whatever the case might be. Reduces when you're the one selling, increases when you're the one receiving. So sales invoice is to show indebtedness. Now, this statement, a document to show the customer the amount still owed at the point in time. So for those of us that have accounting knowledge or where we're working, there's this thing we call a debtor statement. A debtor statement. Most companies keeps this to show that, so we buy this item at this point in time, you are here to pay, you pay part of this. There's a company that when they buy new item now, they'll be paying for previous one. When they buy today, they will not pay for today. They will pay for the one for last month. So a statement is like your bank account statement. As it's going, as it's increasing, it's decreasing. Increasing, decreases. When it increases, when you sell more to them, it decreases when they pay part of the money being owed. So at the end of the year, by the end of the month, they do what we call reconciliation. Sometimes when they want to audit our accounts, they do something we call debtor circularization. Debtor circularization is to confirm the amount that is being owned by your debtor at the end of the period in comparison with the amount reported in your own book as at the year end. That is what they call debtor circularization. Same way as creditors. With this creditor, it will be reverse. So credit note, this is issue when a customer return goods. We understand that one. The customer return goods and the business agrees to this. That is, the business might not agree in the sense that, well, this is not how you let this item left our office, so we're not going to take it back. But when they take it back, then they issue the credit note. We've explained credit note. So that is the sales cycle. I think it has, yes, that is the sales cycle. Please, let's read all this illustration they've done here. By Saturday, I believe we'll solve question. I don't mind starting from this place that we stop. So purchases also have cycle. Just interchange the purchases cycle, the sales cycle we explain with the purchases. See, purchase order. You sales order means customer is placing order with you. Purchase order, you are the one placing order. Goods received note means that you've received this item. But if you are the one making sales, it is a goods dispatch because it's going out of your inventory. But purchases, you are the one receiving it. Now, instead of sales invoice, you have purchase invoice. Statement is still statement. That is a document from the supplier to show the amount CO at the point in time. We've explained the same way with the what? The same way with the sales. That is to show the amount that your customer is owing you at the end of the day. So please let's read and let's do some workings. I'll be coming with question on Saturday by God's grace unfailingly. So thank you for your time. I'm sorry for the break in today's class. Thank you everyone. Please, if you have any question, I'll be able to attend to your questions. And I said people that are owing me, or I'm owing you answers to some questions, please, I'll attend to everything. As per registration, as per course you'll be writing, exemption and everything, I will attend to everything. Please, just bear with me. Thank you for your time. Bye, everyone.
Bye, sir. Good night.
Okay, thank you so much.
Bye.